news flow may remain relatively somnambulant here in the UK in the coming week, barring quarterly results or trading updates from Shell, Glencore and BT, all of which fall on Thursday the 30th of January. But in the USA, reporting season will go up several gears, not least because 5 of the so-called Magnificent 7 will report figures for the final 3 months of 2024. Microsoft, Meta and Tesla will release their numbers on Wednesday the 29th of January, and Apple and Amazon.com on Thursday the 30th. The two outliers, well, they're Google's parent Alphabet, due on the 4th of February, and Nvidia, which has a January quarter end rather than December, and is thus due to publish on the 26th of February. This septet continues to fire investors' imagination. Over the past 12 months, their aggregate stock market capitalization has surged by nearly 50% to $17.7 trillion as I sit here. That's the equivalent of 35% of the stock market value of the entire S&P 500 index, and the 5.4 trillion combined increase in their market cap has provided more than half of the advance in the total value of that S&P 500 benchmark. Where these companies' shares go, therefore, matters, and also not just to shareholders, but investors across the wider stock market, even if they hold, say, passive tracker funds. Again, these 7 funds represent more than a third of the S&P 500 stock market valuation, and therefore 1/5 of that of the FTSE All-World Index. There has been some variation in performance between the Mag 7. Nvidia and Meta have more than doubled over the past 12 months, but Microsoft's up just 7%, and Apple's 20% gain looks relatively modest within the context of this grouping. Some of that could just be a matter, though, of the law of large numbers, because Apple is the single most highly valued company in the world, with a stock market capitalization of $3.5 trillion, just ahead of Nvidia. Microsoft also tops the $3 trillion mark, but in this week's video, we will look at Apple's first quarter results for the 3 months to the end of December. This is going to be a particularly interesting and timely set of figures. The shares may trade close to an all-time high, but recent news flow from Apple or its industry, it's been a bit mixed. IDC data showed the global mobile phone shipments actually rose just 2.4% year-on-year in the fourth quarter of 2024, while Apple's unit shipments fell by 4.1%. Meanwhile, data from research house Canalys showed Apple shipments in China, the world's largest smartphone market, were down 17% year-on-year in the fourth quarter of last year. The company responded with price cuts in China, a rare development for Apple, even for the newly released iPhone 16, where a lack of killer AI applications seems to have been a bit of a handicap. The stronger dollar also has some nuisance value, and the company faces regulatory pressure on several fronts in the US and Europe, and everyone's wondering what President Trump's tariff plans may mean. Whatever the reason, analysts and shareholders will be looking to Chief Executive Tim Cook and Chief Financial Officer Kevin Parekh, who took over that role from Luca Maestri on the 1st of January, for a strong first quarter set of figures with upbeat guidance for the second for good measure. When it comes to the numbers for October to December, analysts will initially home in on 2 headline figures. The first is sales, where the consensus estimate is $124.2 billion, up 4% year-on-year. In the unlikely event Apple gives any steer for the second quarter, analysts are looking for $96.4 billion, up 6% year-on-year. The second number is earnings per share, or EPS. Here, analysts are looking for $2.36 a share for net income of around $35.6 billion, up by 8% compared to a year ago. In the second quarter, if there's any guidance, analysts are looking for $1.68, up 10% year-on-year. Analysts and investors will then look at the divisional mix of sales. In the fourth quarter of last year, services and iMac were the only segments that rose by a double-digit percentage rate year-on-year revenue-wise, as the app ecosystem again proved its power, while iPad sales fell year-on-year for the third time in 4 quarters, and wearable sales retreated year-on-year for the 5th time in a row. The services business is high margin, with a gross return on sales of 74% in the fourth quarter compared to 36% from hardware products. So ongoing progress here is important as it supports sales and profits growth and also cash flow. That cash flow supplements Apple's still hefty net cash pile, which came to nearly $60 billion in September. That's down from the highs thanks to share buybacks, and note that Apple has $97 billion in gross debt, again thanks to the buyback programs. The interest costs could start to become of a little more importance here if interest rates stay high for longer. Nevertheless, this powerful cash flow, added to the net cash position, enabled Apple to pay out $3.8 billion in dividends in the fourth quarter and buy back more than $25 billion of stock. That took the total cash return to investors by Apple to $868 billion, 159 in dividends, 709 in buybacks, since the company first returned cash to shareholders in 2012, when the firm's market cap was just $440 billion. I hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.